Good afternoon, everybody. My name's Ralph Armeta, and I'm with InCenter Lending Services, the president of an entity we call Lending in a Box. And I've spent a lot of time in servicing over the last 6-7 years. And so I think servicing is a really important conversation for mortgage bankers that own MSRs. So I'm going to call up Toby Wells. Toby, come on up. Toby is the president of Cornerstone Mortgage Servicing. And then Rob Jewett, who is the chief operating officer for New Fed Mortgage. And then we have Mickey Schilling, who is the CRO and EVP of Megastar Financial. And then we have Kimberly Browne, who is the president of Chrysalis Holdings. And then last but certainly not least, Sarah Valentini, who is the CEO of Radius Financial Group. Maybe everybody could just take a minute and introduce yourselves and we'll get on. Go ahead.
Hi. Hi, everybody. I'm Toby Wells. I'm the president of Cornerstone Servicing. Cornerstone Servicing is a newer third-party subservicer that was built to deliver exceptional customer experience. By way of background, I've been in the business for about 30 years. Prior to joining Cornerstone, I was one of the founding partners and CEO of a company called Specialized Loan Servicing, Computer Share Loan Services, for 20 years before Cornerstone. So I'm happy to be here and speak to everybody today.
Thank you.
Hi, I'm Rob Jewett. I'm the Chief Operating Officer at New Fed Mortgage. We are a IMB based out of Massachusetts, one of the few left. We hold a servicing portfolio of about $1.5 billion. I'm very happy to be on the panel, kind of represent that lender side and that lender view, and I look forward to the discussion.
Hi, I'm Mickey Schilling. I am Chief Revenue Officer for Megastar Financial Corp. We're based in Denver, Colorado, and licensed in about 39 states now. We service about $3 billion currently, Fannie, Freddie, and Ginnie, and we're retail only. So,
hi, I'm Kimberly Browne. I'm president of Chrysalis Holdings. I'm a board member as well. We have 7 subsidiaries. The 2 that are most relevant to today are New Day USA, veteran mortgage company. That's a consumer direct platform. We are a client of Toby's as of February. So Cornerstone is my subservicer. We also have New Day India, that is a tech and ops platform, and Hyderabad, India. So I'm really glad to be here.
Sarah Valentini, I'm the CEO of Radius Financial Group, also based in Massachusetts. I think we're the other IMB still standing. Been in business since 1999, and we started servicing during COVID, which is a good time to start. And we use the subservicer as well. So happy to be here.
Super. Thank you, everybody. All right, let's get it started. So first question I'm going to direct. So if you notice, the common theme here is we've got IMBs sitting up here that own MSR. So Mickey, from the perspective of loan originators, why does working for a lender that retains servicing matter? And how does it allow them to compete more effectively and truly position themselves as a lender for life?
well, I think servicing today for a loan officer is more important than ever before. We've seen, the changes in our ecosystem, with Rocket, Redfin, Mr. Cooper. And, when you're selling your loans now, the capture rate is so high with some of these aggregators that you're literally selling that loan and that relationship for life. And so for loan officers, they want to retain that relationship, and being able to retain the relationship, gives them more at bats with that customer. So, maybe they do a primary, maybe they do a refi, then they may do a second home or DSCR or whatever. So loan officers have figured it out, and also too, if they are not working with someone who retains servicing, and also has a really good platform, to, make sure they manage the data to where they can take action on it. That's as important as well. And so, for example, within our database, we even break it out by category of generation, millennials, Gen X, baby boomers, who needs a reverse mortgage in a few more years, probably. And so that's important too, to make sure that when they're looking for not just that they retain servicing and have that stickiness, that lender for life, but that they have it built out to where they can actually get in and work that database. So, for example, with our company and our tech stack loan maps, it'll show any alerts, the birthdays, the equity build, and all of that things that gives another conversation to where they're providing them with that exemplary support. So otherwise, loan officers, if they're working for a company that's not retaining servicing, I'll say the other part of that is retaining servicing helps you with your balance sheet and helps you get you through those cycles, right? Having that servicing asset. If you're working for somebody, a loan officer today who's not servicing, they're just selling their borrower again and again, and you're like a little gerbil on the wheel. So.
Perfect. Thank you very much. Rob, I'm going to give you the same question because you're an IMB too.
All right. Well, Mickey said it far more eloquently than I'm going to, but from a loan officer standpoint, from what I see, it's super important, right? My company, one of our slogans is we're your lender for life. If we're just turning around and releasing all of our MSRs, we're not really your lender for life. We're your lender for that transaction. Our focus is truly being your lender for life. So how do we do that? We leverage our data, and we show the loan officers how we do that. We use a lot of customer intelligence. We've built out predictive analysis. It's not just, oh, hey, I can get a refi out of this in the future. It's let's really dig into your life events. Let's see what's going on. Are there investment property opportunities? Are there, opportunities for a second home? Is it time to upgrade your home? We can do all that work and do the thinking for the customer before the customer is thinking of it themselves. So we really focus on how can we stay sticky, stay in front of that customer. So at such time that they're in their head thinking about a financial transaction, they're thinking of us and they're thinking of that loan officer. That's how we frame it to our loan officers and how we show them how we do that and how we retain within our portfolio. And it's just really, data is power, right? And the more data you can have, the stronger your retention rate is going to be.
Super. Thank you. So let's stay on the theme of data. So Sarah, how does Radius look at data in terms of retaining and getting sticky with your borrowers?
Well, I think that in our business, loan officers tend to be very transactional and, only think about the last loan that they did. And we look at the data to see, how can we do more with this borrower? Because there's so many studies that the more products somebody has with you, the more they're likely to refer other people to you. So, we own an insurance company and we use our servicing to market our insurance to the clients, whether it's home equities or other products, and getting that future referrals from them. So, we use our CRM and are constantly staying in touch with the borrower and using our servicing statements to communicate with them to get more business from them.
Super. And so, Kimberly, you mentioned that you have a big focus on the VA segment of mortgage banking. So again, with the theme of data and your MSR portfolio, how do you stay sticky with your VA clients?
Sure. We're a unique independent mortgage bank in the sense that it's a call center only. It's a single product, right? It's a VA product only. So we've actually invested in quants. We have an entire quant team led by a PhD of mathematics. We lead offense and play defense through data. So we direct mail through statistics about consumers. So data runs through the DNA of our organization. I have a little bit of a different lens. So I think we've hit borrowers very well. I'm an investment banking background, so I look at dollars and cents a lot. So I ask the owner to trust me and invest in this asset. And what a lot of people don't think about, it's a great arbitrage trade, but then you have real risk in times like today, right? You see the 10 years below 4%, right? But what does that mean? It means you could lose the asset. So I look at, data from, depreciation expense. Like we spent a lot of money bringing that customer in and we own that asset. And it's a lot of expense to flush through your P&L if you can't protect it. So we use data in a lot of ways. We look at, when they're in the money, like if a refinance is there, we scrape credit card usage, like life events. And I think most notably, we created a hybrid subservicing platform. So we're not quite large enough. I would say I'm a little scandalous, but I think you should have 50 billion or more if you're going to build your own servicer. I think it's very expensive and compliance is really important these days. So I use Cornerstone Servicing in a hybrid fashion where we actually are the call center for all performing loans. So our agents are on the phones in their systems. We do that to keep continuous branding. Continuity of branding really matters. We hired the DeJulius group. So if you think about white glove customer service that you love, Ritz-Carlton, right? Big fan. Chick-fil-A, right? They do a wonderful job. Like I want to hire every one of those kids at our organization. So we brought that customer service agency in. We've trained our account executives. We do most of our transactions on the phone, which is very rare. In this day and age, our first contact is 45 minutes typically, and it's more of a financial planning session. So we take that data and we feed it all the way through the life cycle of a loan. So when we're collecting on our own agent's side information about the consumers, it's being fed back. So we do that. We also do, a cross sell. So we have an Experian LifeLock product that we offer to veterans for free. It's that second touch that we talk about, a different product that makes them stickier. Veterans are 5 times more likely to have their identity stolen because of their deployment and moving so often. So that's something that we offer, but it's when there's not something else like in a transaction that we can do for them, it gives them the protection and keeps us front and center. So
Thank you. So Toby, you just heard from 4 IMBs. One is actually your client. So maybe you could talk a little bit about your thoughts around the data and the recapture retention and, what IMB should be thinking about in terms of looking at MSRs as an asset and a subservicer.
Okay. Well, it's a lot. There is a lot. I think in terms of retention, in terms of retaining MSR, I think it's critical. It really is as simple as you're selling your customer. There's no upside to selling that customer. As they leave you, they're either going to have a bad experience and blame you and not do business with you, or they're going to have a great experience and they're going to forget you because they're with another lender doing a great job. So retaining is critical. When you think about a subservicer, I tend to focus on how, if I'm trying to retain my client, how do I get somebody that's really going to help me optimize that relationship value with my customer moving forward? Because that's the real value of the MSR. There's cash flows. It's a wonderful asset. There's a lot of upside to MSR that makes sense for any IMB to have. But ultimately, you want to optimize that relationship with your customer. And so how do you take when you're selecting a subservicer, if you were going to build your own servicer, how would you think about servicing? Are they going to align with you culturally? Are they going to align with the same experience that you delivered as an IMB? And you got to ask yourself some questions, and you do that. And some of those are going to be very basic, as Kimberly said, customer service. Is somebody delivering on great customer service? How do you know that? Some questions you can ask are things like as simple as average speed of answer. How quickly do you actually take an inbound call? What is your target when you're doing that? There is going to be, from a customer experience, from a technology perspective, and just reviewing the technology, is the customer going to be able to access the information they need to be able to, access their loan information, make a payment, things of that nature. Any kind of, what is the servicer from a data perspective going to do to continue to support my ongoing marketing efforts? Are they going to support my loan officers that maybe it's retail or maybe it's direct? And how are they going to do that? How are they going to take a potential lead or work in tandem with my organization to get that lead back if you're in a retail group, which is fairly complicated? to a retail loan officer as opposed to a direct team. Some other things to consider as you move forward are things, these are things that most shops would look at, things like compliance. Generally speaking, most subservicers are going to be very compliant. That's not really going to be the issue. The issue is going to be your compliance. So when you have an issue or you have a challenge or a problem, is that servicer in a position to support you in providing information timely, being able to support you with inquiries that are coming in from regulators, things of that nature. And then another thing just to consider as you are retaining more servicing, if you are retaining things like government servicing as an example, government servicing has some performance risk or credit risk associated with that. And so the servicer, at the end of the day, we want to deliver a great experience. We want to make sure that we are providing all the data and the marketing to be able to assist you in retaining customers and create additional touch points in the future. But you also have to be able to collect a payment. And so you want to make sure that's at the top of mind, that customers are reminded that the most important thing they can do is make their payment, and in ways to avoid any kind of artificial delinquency. Do they have the right kind of loss mitigation systems to assist customers? And ultimately, do they have the ability in the back end from a data perspective to hold accountable the different parties that are associated with any kind of potential loss? So if you'd had a loss, what did that loss come from? And so how quickly can they provide that information, and how clear and transparent is it? And that ultimately is going to mean you get the best of all worlds. You get a partner that's going to work in tandem to retain your customer and optimize those relationships. You're going to have a partner that's going to assist you in minimizing any ongoing credit risk and optimize the economics of the MSR that you actually own.
Thank you, Toby. Thank you for that. All right, let's go to Rob. Rob, what unique advantages do smaller and mid-sized lenders have over the big servicers when it comes to keeping the customer for life? And how do you capitalize on those advantages?
It's a great question. I like to focus on the fact that we're local. We know these people. We know their name. They're not just a loan number. We're in the community with them. That's our advantage in there, is we're in front of these people every day. There's still something to be said with all the data, and I am a tech guy. I will be the first one to say that, and have direct to consumer, and I understand the advantages of it, but there is still something to be able to sit at a table with somebody. There's still something to face, and that's in a lot of the touch points we put out. Is we're still here for you, good times, bad times. We're here to help, and we see a lot of benefit in that.
Super, thank you, Sarah. Same question to you.
Yeah, I mean, I agree with that. We're similar organizations, similar size, similar geography, and I think we're constantly competing with banks, and that's a selling point of a bank. So when our clients hear that, they're going to get their statements, and we still can help them with all the post-closing issues. That's a big point for them, and it matters to them. So just real similar.
Super, thank you. All right, Kimberly, I'm going to give you the investment banking question.
My wheelhouse.
All right. So when seeking to invest and scale a servicing portfolio, what are the most capital intensive areas, and how do you prioritize investment in compliance, oversight, and talent to balance risk and growth?
Sure. If you recall, we invest in VA mortgage servicing rates, which are the riskiest, in my opinion, from a capital perspective. They tend to be less liquid, and you don't have full principal coverage from the guarantee. It's a partial coverage, so loss severity really hurts. I have a quant team. I'm very lucky to be afforded that. We run stress models for capital largely. If you look at my background, why doesn't an independent mortgage bank have me? They need debt facilities to support the advanced needs of servicing. So we're a real top-down capital strategy type of organization, right? And I think that's critical. I would say from a compliance perspective, I'm going to sell Toby and Cornerstone a little bit here, because I think if you're thinking of a subservicer, I've gone through RFPs a lot in my life and career. Why do you pick people? And they have a very differentiated approach. And so let's say compliance maybe isn't your strength, right? Toby has assembled a management team that's very unique. If you look at head of business development, Jesse Ross, and the audience, like, you get a loss mitigation expert, right? You're not just having a salesperson that's a liaison that has no subject matter depth. So my time's efficient. You've got Megan in the audience who's marketing. She wasn't from mortgage. Why did they pick her to be on the team? Because she wanted to speak to customers through a lens, right? That made sense to them. And she does a fabulous job. So as part of that team assembly, compliance was one of those components. It's where we've had to be very strong. New Day has had a lot of regulatory focus, we'll say, and we've had to bolster our legal and compliance teams. But they have an ad hoc approach to, where do you want us to lean in? Do you want us to take more of a hands-on approach with your compliance reviews, with Jenny Mayer, with the state regulators, or do you want to have us collaborate with you and you take the lead? So I think it's really important, if you look at a subservicer, and your financial risk, like, really assess what you're good at and what you're not, and choose a partner that is really supportive, like, on the areas that you're not. Loss mitigation was really important to us. So, we leaned in heavily there, and they're supporting a product that we're launching. That's unusual to the market, and it's not a mortgage product. So pick a company that can grow with you too. But you have to have liquidity to have servicing. You're going to have delinquency, and you're expected to advance.
Thank you. So, Mickey, you're going to be out there now looking at branches and branch acquisitions and how to continue building Megastar. You guys are in a bunch of states and things of that sort. So as you think about those things today, is questions coming to you in these conversations with branch managers and LOs and states that you are looking at for the retention of servicing?
Oh, absolutely. It's as I said earlier, it's a conversation now more so than ever. Whereas in the past, I don't think I used to be asked that. I will say, as I made the decision to make a move recently, that was one of the check boxes for me is, are you a servicer? Because, servicing takes, it takes capital. As you said, you've got to have a strong team. And, working for a company that I was at most recently was a younger company, 5 years old, and had been at a bank before they started an IMB and was working towards servicing. It takes a while to get to the point to where you're ready to service. You have to not just, be Fannie Freddie approved. You have to be seller servicer approved. You have to have a consultant. You have to go through a new QC audit. It takes time. So it's sort of the logical next step as you go. I think about mortgage brokers, bankers, correspondent lenders. That's an escalator of growth, right? And the goal is hopefully that they'll want to be a servicer one day and retain that asset. So going back to your question, though, I think definitely that is what I'm going to be out there selling, that not only do they have all three tickets, that's unique these days, as well as retaining servicing, just for the very thing that a lot of them have seen. I just have to go get another customer every time I sell this customer someplace else. And it is their life book of business. I think, when you think about the fact, if you've been in ops and sales, salespeople don't get a paycheck every single month. They eat what they kill. And so that is, you talk about building a book. They want to retain that book for as long as they can and have access to it. And the other thing about it too, when thinking about servicing, I think about when I didn't work for a servicer, but I would have that escrow analysis call, right? I got this new escrow analysis, and why am I going to have a payment that goes up $250 and I can't afford this? I'm so sorry. I'm not the servicer of your loan. I can't help you. I can't even talk on your behalf to the servicer, right? Because that loan's been sold to, whomever. And so loan officers really want to have that full service aspect to be able to answer those questions and guide their borrowers. So that is definitely something I'll be sharing out there.
Super.
I could piggyback off that a little bit.
Please.
I think Mickey's spot on. At the end of the day, in my experience, loan officers want control. They want control over the front end of the process. They want control over the back end of the process. I've personally found that question coming up more and more the more loan officers I meet with. It's, are you a Fannie Freddie seller servicer? Do you sell to the agencies? Yes. What's your tech stack look like? This. Do you service? It's always the third question, where in the past, it was never even a question, never even came into the conversation. Mm-hmm. It's adding to the conversation of how important it is in this day and age.
Super. So that's a great segue into how much control or how much do you let your LOs participate in looking at servicing information, either vis-a-vis through your CRM, vis-a-vis through the ability to sign on as an employee into the servicing system, et cetera. So, Sarah, why don't we start with you?
So we have everything's automated. So, they're going to get an alert if we think that the client should refinance, but they can't log into the system, but it's all automated for them, and that information gets delivered directly to them.
So being a call center, consumer direct, we're more institutionalized sales, which I know is a very different concept than you have here. We do have technology that we will direct it back to the original account executive if they come in through servicing. Keep in mind, our servicing team is on the same floor as our account execs. We're centralized. So a lot of times the greatest part of my trip in is you'll see an account exec at a servicing rep's desk and, they're solutioning a customer together. But we try to keep the continuity, but we also direct our leads based on data and like the likelihood of conversion to our best AEs as well. So we're slightly different than some on the stage that way.
Yeah. Great. Mickey?
Well, yes. So our CRM, LOS, POS is all together. So there is an area on their dashboard that will show opportunities, right? An opportunity alert. And I'll talk about the trigger lead also, because as you recall, there's 3 reasons you can be alerted. If you're the servicer is one of them, or the originating loan originator, or if you have a banker, relationship with them. So being a servicer does allow you to get that alert to where you can still, I personally think the loan officer, if they're doing their job right, they are proactive, not reactive, because by the time they get the trigger lead, you're behind the 8 ball, but it still gives you an at bat at it, but it's still there. And as a servicer, they will have that access to it.
Rob?
Yeah, kind of to echo what these guys have said, we've made an investment into our CRM and we leverage that to its fullest extent. And we've made a big investment into our customer intelligence tools. So we're constantly monitoring our servicing pipeline, again, to stay in front of these customers as much as humanly possible. To Mickey's point, we want to get as many at-bats as we can.
Super. So Toby, you just heard how all 4 of these IMBs leverage servicing data. What does Cornerstone do, either developing a very boutique opportunity for a subservicing client, or whether you have kind of an off-the-rack type of solution to help IMBs that are owning servicing use their data efficiently and stay in front of the customer?
We have several tools. I mean, one, we're providing a robust amount of information to clients on a nightly basis to update systems so they're up to date on accuracy, update on FICO, ABMs, things of that nature. So they have a lot of good information to act on within their systems. One of the primary things, though, besides all the data and the data access, and we provide a lot of different tools, is, and this is critical from a loan officer perspective, is being able to offer two services. One is we have a concierge group that basically just for LOs that is open, whether that's an oversight group, because depending on how you're structured, you may have oversight that'll ask that question, or you may want to have your individual LOs just have one-off questions. Say an LO's in the field and they have a question on recast. So what are the rules on recast? Is it eligible, not eligible? There's knowledge tools they can have access to, but a lot of times LOs don't want to do that. So they can make a phone call or shoot an email into a concierge group, which is direct access. You're not going through account management. You kind of have a line in, and you're going to get a response immediately on the phone or inside of an hour through an email. You have inevitably loan officers are dealing with a customer that maybe was upset about something complicated like an exemption issue or something of that nature that is very typical that you got to walk through. And so we also allow LOs to go directly to what we call an escalation executive services that helps them as a single point of contact to contact the customer inside of 2 hours. They're going to work to resolve that issue, keep the LO and the customer updated until complete. They're going to do that every 48 hours if it takes longer than that. And then once it's complete, make sure it meets the customer's expectation, update the loan officer and the customer on the resolution. They send apology cards, gift cards as appropriate. That is where you enable an LO to own that relationship. And they actually are supported with a team as if it's your team in the back office to assist. Those are invaluable resources for LOs beyond the regular data. And we do provide a lot of system access, kind of limited, like contact information, things of that nature. I would tell you LOs generally don't use that. Back at the operations like branch management, they may use it. So there's a number of tools and access points that allows LOs to really be the hero and continue that relationship with the customer beyond the regular refinancing, which clearly there's a lot of really neat tools and capabilities there that we offer. But those two really are value adds for loan officers in the field.